let's start with earnings, right? I mean, a lot of earnings coming out. You're going to see this over the next couple of weeks. And I don't know. Daniel, I'll let you start. What do you want to start with?
Well, I'll let you, I'll tee one up here for you, only because you already brought up Succession, which I've only seen one episode of that, and it was good. Frank talked about that in his monologue the other day. Interesting, entertaining, I get that. But since you brought up a show, let's talk about another one. What is this Squid Game here, Frank? Are you, have you seen this?
Yes.
Because Netflix reported solid earnings, and I'm assuming that, I didn't really go through it. This is Frank's ballpark. He loves Netflix, and a segue into his drinking game favorite company that we'll talk about in a minute.
You see why Netflix is the king, right? You see why Netflix is the king. And the numbers are good. I wouldn't say they were fantastically great. Asia Pacific's on fire. That's a growth model for Netflix going forward. Subscribers used to be the KPI, right? Key performance indicator. That was like every stock has something you want to look at, right? And it's not always earnings, and that's going to drive the stock. It's not always sales. Sometimes it is subscribers. Sometimes average revenue per user, which no one cares about average revenue per user. Or Disney would have crashed already because Disney's like at 450, 475, and Netflix is like more than double, triple that, which tells you that pricing power, which tells you there's a lot of free people on Disney's platform, which is starting to come off, and that's why you saw downgrading, slower growth, and now they're realizing that streaming, which I've said for freaking many times, many years, it's one of the hardest businesses to be in. Just the costs to constantly come out with new content, and that's what it's about, right? Squid Game came out. I'm up to episode 7, and
out of how many? Is this thing brand
9.
new?
It's 9 for the first season, but what Netflix does, it allows you to watch all 9 at the same time. Back to back to back to back. Well, even some streaming services still, they're like, here, we have it streaming, and then next week it come out. You got to wait next week. It's not like, SVU or one of these, shows on television. So you get to watch the whole thing and you binge watch it. But they said, this number is just like insane. 142 million member households, 142 million member households globally have chosen to watch this show in its first 4 weeks. Now, that number, if you look at Facebook and say, well, they got 2 billion, this and that, whatever. I mean, how many are real, true active users? It's lower than that. But I'm going to put that in perspective. There's only 123 million households in the U.S., right? So 142 million in 4 weeks. And it's entertaining. I don't want to go out there and say it's great, because I went in with low expectations and I like it, but I know some people say, it's not that great. I thought it was good. It's violent. It's original. You've read these stories in books. There's not many 2 movies, Hunger Games maybe, but not really. But it's really, it's cool. It's a great show. It's entertaining as hell. I like it a lot. But it just goes to show you how important it is when it comes to, new content. But getting back to that KPI and subscribers used to be, that's the number that everybody wanted to see. And that's why Disney was smart. Let's partner with Verizon. Everybody gets a service for free. And I have Verizon. I have a family plan. I called there and said, hey, I'm going to get it for a year. Like, no, you have it for life, for free. Well, because those subscriber numbers were driving the stock during a time, the worst period maybe in Disney's, I wouldn't say history, but pretty close to that in the last 30 years, because COVID affected this company, impacted this company more than any other company, major company. You can even say more than the airlines. The airlines are coming back right now, but Disney does not have this recurring revenue stream, which, means that they had to find ways, and their earnings, they're one of the few companies in the Dow. And I bet you Boeing, I don't know if they did already, but Boeing's probably going to reinstate their dividend. They're one of the few companies that didn't reinstate its dividend because they can't pay it, right? The expenses that they have are incredible. They can't afford to keep up with Time Warner, AT&T, which has recurring revenue, and they're starting to really build that platform internationally. They can't keep up with Netflix. These guys are spending $20 billion a year. Disney's not. It's new content, and their new content consists of Marvel, and they can't stream that. They already got in trouble. Someone almost sued them because they wanted to stream it. That's their biggest generator, right, from the movies. And the movies are doing great, but those Marvel titles generate $1 billion plus in the movies, not in streaming. So they're caught in a really bad place right now because all these subscribers that are in for free are starting to dump off. They don't have pricing power. You see something like this with Netflix come out. You see Succession come out, HBO and streaming. So it's just, when I see this and what Netflix is doing, it's really incredible. But just 142 million member households. I mean, you're looking at 400, 500 million people watching this thing, maybe more. When it comes to households, they're building a gaming platform as well, which is going to be included in subscriptions and everything, and not going to have advertisements or anything. They're going to get more people on that platform, and they have incredible pricing power. They're the king of this market. It's just subscribers. It's a saturated market. Everybody has streaming. I don't think subscribers is going to be the number looking forward. It has to be the number for Disney because they just don't have the revenue or the earnings. Their earnings are still not going to get back to pre-COVID levels probably for another 2 years, which is insane. A lot of companies are reporting numbers back to those levels or even higher than 2019 pre-COVID levels. It just shows the big disconnect where, Disney's not second here. Time Warner is now, AT&T in that platform, the HBO. But Disney here, I don't know what they're going to do. I have nothing against Disney. I go there to take my kids. I like them. From a stock perspective, their biggest growth market, Daniel, is streaming. That's what they based their whole company on. They went all in on streaming, and you're seeing much, much slower growth. Yet that stock is trading at 40 times forward earnings. Why in the hell would you pay 40 times forward earnings for a stock that's going to show significantly slower growth going forward? But who knows? Again, sometimes the numbers don't matter. And with this report from Netflix, it just shows how they're the clear leader. Nobody's even close to them. And AT&T, Time Warner, they're second. Disney is falling, and it's going to be interesting to see what they do to really, how they're going to back out of this or say, hey, well, we're not going all in. It's just going to be part of our platform. But they're stuck between a rock and a hard place right now. It should be interesting over the next few months to see what they announce.
Yeah, Disney's down, from 200 a share in March-ish to 170 right now, so it's definitely pulled back. AT&T reports tomorrow, I believe, so that'll be interesting to see some comments that they have on their streaming, gaining market share and all that kind of thing.
Falling off. That's one of our ones on our portfolio. We're down about 9% on it. It hasn't been good. For me, I think, and I'm not saying this where you're early and you're wrong, but I just think the separation and what they did with their platforms to separate new business and discovery is a fantastic, fantastic thing. They provide a tremendous value. It's going to take a while to get the approvals, and now you're sitting here as a shareholder going, dividend's going to be a little bit less, but still, when they come out with their numbers, I'm expecting them to be pretty good, but the streaming numbers should be even great because they have a lot of great new content that's coming out, and that they just launched as well, which you should see that in when they report streaming results.
Yeah. Sticking with earnings, you made a great, you told me a solid bullet point from United that reported earlier.
Yeah.
And I want to use that to talk about Southwest and a big win for society in general. So the bullet there was...
lots of bullets. United CEO was on CNBC. He said pullback in demand has definitely bottomed out and demand is improving.
Those are strong words. I mean, that's great to hear.
These guys didn't fudge their numbers. They told you when things were really bad, right? So holiday international demand is strong. Thinks business travel will start to return again in January. European bookings are up versus 2019. That's a huge surprise to me. They say 99.7% employees are vaccinated, which we'll get into, the Southwest thing. Air travel remains a great bargain. Airplanes will be full for the holidays. Demand's robust and strong. Again, buying the airlines here, they're trading significantly off their COVID highs. These guys have incredible pricing power. Everybody's going to need to travel. Everything is going to open up. It could take 3 months, 6 months, 9 months, a year from now when everything opens up internationally. These guys are going to be raked. They were reporting record profits before this happened. Now they're leaner than ever. And wait till you see with the prices. You guys know if you're traveling, the price that they're charging. I mean, profits are going to explode for these guys. It could take a little bit longer, but buying at these levels, maybe you have 10% risk here, and I think you have 50% plus upside. Netflix, Procter Gamble, I thought had very, very good earnings. They talked about prices were being raised. I looked at that quarter. I thought it was a very, very good quarter. Solid dividend. Again, it's not the most exciting company, but I was just surprised that company was kind of going to be like, out of the early companies reporting. And that was a pretty good report. And I don't know it's because expectations were bad, but, they really, they did a good job of managing costs. It was one of the quarters I looked at where, organic sales, every one of the divisions showed growth. Organic sales grew by 7%. Personal healthcare outperformed. It was just every division grew a little bit, and it was much better than expected, and they're handling the inflationary concerns, which means that they're able to pass off those higher prices to consumers. So I thought that was a really good number for conservative investors. P&G, I like where they are. I think the stock is cheap here. Yeah,
I mean, I don't think there's a lot of risk in that name. I just think that they definitely warned of higher costs going forward, and we'll see what that pressure's on margins like. But everybody should know that and be aware of that for everybody just with general inflation. So something we've been talking about for quite some time.